Hey there, welcome back to another edition of the DGI Crab. My name is Colby, the DGI Crab, and today this I'm going to talk about a very popular thing to talk about here on YouTube, which is the top 10 favorite dividend growth stocks of mine. Everybody, I think, has some sort of a top 10 channel, and this one is mine. Now, I was actually asked very recently by a friend, hey, been watching the channel, and I think your advice is interesting. But what if I really don't want to pay attention week to week to what looks undervalued and what I should be adding to? What if I just wanted to invest in just 10 different stocks? What would they be? You've got to narrow it down. I said, well, I've already narrowed it down to 60 on here on this channel. That was enough of a challenge. And he said, no, you've got to narrow it down to 10. If you only ever were to invest in 10 stocks, what would they be? So I had to put in a fair amount of work here to really think through which ones that I would go with to sleep well at night. I'm going to preface this by just making a couple of quick statements here. One is that if you're only going to have 10 stocks in your portfolio, I think you definitely need to have some sort of an ETF like VOO to get you exposure into the S&P 500, or even something like VTI, a total U.S. stock market fund, because I don't think that 10 stocks is enough diversification in a portfolio, even if they're 10 powerhouses like I'm about to go through here. And then the second point I will just say is I'm not a licensed professional financial advisor. The opinions expressed in this video are my own. Pretty confident in them, but they are just my own. So if I were to whittle my portfolio down to just 10 individual stocks, and that was all I was going to invest in, what would they be? So here we go. All right, so first off, think that Microsoft Corporation is about as safe of an individual dividend growth stock as there is. They're the largest company in the United States by market cap as of the recording of this video, with a $3.2 trillion market cap. They're a wide moat company. They've been increasing their dividend at a pretty consistent 10% clip now for quite a few years, 19 years total overall. If we look at the 10-year chart on Microsoft, they are up 969% over the past 10 years. So hard to argue with those types of returns. They're outpacing the S&P 500. They're outpacing the vast majority of investments that you could have been making over the course of the last 10 years. Will they continue on this torrid pace? Maybe, maybe not. But this is certainly one that I'm pretty confident that that line on that chart's going to just continue to go up at a nice 45-degree angle into the long-term future. Just can't imagine anything knocking Microsoft off its pedestal at this point in time. They just keep getting bigger and stronger and just gobbling up market share. Next is Visa, stock ticker V. Visa is the largest payment processor on the planet. I'm sure that there will be different challengers over the years in their space, but Visa has been paying a dividend for 15 years. They've been increasing it every single year since they started it at an absolutely torrid pace, about 15 to 20% on average. It's a low starting yield. It's certainly more of a growth play, but if you have a fair amount of time to just wait it out, the annual compound rate at 15 to 20% means that your dividend payment is going to essentially double about every 4 to 5 years if we're using the rule of 72, which is just absolutely staggering. So if you invest enough in Visa where you're getting, let's just say, $1 of a year in dividend payment, you are going to see that dollar basically double every, let's say, 4.5 years. And over the course of, if you've got 25, 30, 35 years of horizon on your timeline, then that can turn into quite a bit of money off of what is a pretty small initial investment if that's all the money that you ever put into Visa. So Visa's absolute powerhouse, over half a trillion in market cap, and definitely one where you can sleep well at night knowing that it's going to be pretty safe and secure. Next up is ExxonMobil Corporation, stock ticker XOM. So Exxon only up 12% on the 10-year horizon. There can be some peaks and valleys certainly in oil, and but Exxon is the biggest player in that space. They have branched into some other avenues in terms of energy production that's a little bit more green than oil. I'm not an expert on Exxon and everything that they've been doing in that space, but it's certainly something that they have been putting a little bit of focus on. I don't think oil's going anywhere anytime soon, no matter how much the Green Party may want it. It's just and this isn't a political statement by any way, shape, or form. It's just the reality of the situation. We're all very much still reliant on oil, and while that may decline over the coming decades, I don't think it's going to be enough to really shake ExxonMobil all that much. And they're such a large company. I think they will be able to pivot into some other spaces, even if there are some rapid changes in the energy market. So ExxonMobil, definitely one that I don't worry too much about. Next is the Procter & Gamble Company, stock ticker PG, up 108% on the 10-year timeline. They are an absolute stud of a dividend payer. They have been increasing that dividend for 67 years. Just for a little bit of perspective on how long of a streak that is, ExxonMobil became a dividend aristocrat of hitting that 25-year consecutive annual dividend increase before I was even born. So they are a very steady stock, not on sale a ton, not massive annual increases at this point in time, but you can just about set your set your clock on their increase and about how much it's going to be in good years and in bad. You definitely have Procter & Gamble products in your house right now. I don't know how you could possibly avoid this company at this point. They just make so many different household goods. Next up, Johnson & Johnson. As of the recording of this video, Johnson & Johnson's actually looks a bit undervalued in my estimation. They're only up 38% on the 10-year chart, but that's honestly just because they're kind of just going through a little temporary slump right now. Johnson & Johnson has also been increasing their dividend for more than 60 years. Very steady dividend increases of about 5 to 7% a year. They are a major player in healthcare products, and they've done some different spinoffs to sort of streamline the company and focus in on the things that they are more of an expert in, so to speak. But certainly Johnson & Johnson is a stock that I don't worry about whatsoever in terms of their reliability and what they're able to do for their shareholders. All right, next is the Coca-Cola Company, stock ticker KO. Coca-Cola is up 50% on the 10-year chart. They haven't been doing big time dividend increases over the last few years. They're kind of in that 3 to 5% range of expected annual increases. And they might start increasing that dividend a little bit more in the future, or maybe they just kind of keep it this particular range. But again, this is another one with 60 plus years of consecutive annual increases, meaning, again, if I'm only buying 10 stocks ever, along with maybe an ETF, hopefully, then this is certainly one that I'm not going to be at all concerned about in terms of their long-term track record. It is a worldwide recognized company, one of the most recognizable companies on the planet, and even if they run into some temporary rough periods, they generally tend to rebound. Just a steady Eddie player. one of Warren Buffett's all-time favorite stocks. And hey, if it's good enough for Warren, it's good enough for me. And then just right behind them is Pepsi, stock ticker PEP, up 83% on the 10-year. I've mentioned in the tier 3 video, which is the video that the age range that I put Pepsi in for dividend growth investors at 42 to 53-year range. Pepsi is basically a beverage and snack food ETF. They have so many different brands under their umbrella, and and by acquiring all of these different brands over the years, they have amassed a $225 billion market cap. Fairly recent entry into the Dividend Kings list with 51 years of consecutive dividend increases. They have been increasing a bit faster and a bit better than their rival Coca-Cola has in recent years. Certainly a wide moat company, and again, it's practically an ETF. They have so many different brands under their umbrella. So if one particular product isn't selling well, they've got about 99 other ones that probably are. Next is McDonald's Corporation, stock ticker MCD, up 155% on the 10-year chart, 48 consecutive years of dividend increases. And if you know anything about McDonald's, something that I think is just so interesting about this company is that McDonald's owns the land underneath their individual restaurants. So while McDonald's is not a REIT, a real estate investment trust, and is not taxed as one, it kind of is in a way, because if you're investing in McDonald's, you are also investing in property, as well as the burgers and the nuggies and the fries and the McFlurries and all of the other goodies that they have. One of my absolute all-time favorite stocks, and this was one of the very first ones that I knew for sure would be on this list of the top 10. Can't go wrong with McDonald's. All right, and then we have Union Pacific Corporation, stock ticker UNP. So I was talking about green energy earlier with Exxon. Railroads and transporting things via railroad is actually pretty darn green. And so I don't think that moving and shipping things in large quantities is going to go anywhere in my lifetime. Union Pacific has more tracks laid down across this country than any of the other railroads. I fully expect Union Pacific to continue to be a strong performer in the coming years, regardless of where we go with our energy. They are up 124% on the 10-year timeline. Good solid compounder with generally about 8 to 11% annual increases. Union Pacific is a very solid investment if you ask me. All right, and then we have Waste Management, stock ticker WM. This is the largest trash collection and waste services company in the country, up 375% on the 10-year chart. Somebody has to come and pick up the trash, regardless of what is going on in the country, who the president is, how good or how bad the economy is. This is just one of those things that is going to happen, and is going to have to happen in our modern society. So that is a big reason why Waste Management has made the list. Somebody's got to do it, right? Dirty job, somebody's got to do it, and nobody does it more than Waste Management. So outside of those 10, that is my top 10 honorable mentions on the list that were close but didn't quite make it. And it was hard to keep these off, but I had to limit it to 10, right? So just honorable mentions: Lockheed Martin, biggest military contractor or defense contractor in the country; Realty Income, everybody's favorite real estate investment trust; JP Morgan, largest bank in the country or the world for that matter; Chevron, just right behind ExxonMobil in terms of being a major player in the oil space; Automatic Data Processing and Air Products and Chemicals are also fantastic stocks with wonderful track records of growing the dividend and are certainly worth checking out as well. But that is the top 10 stocks that I would invest in if I were only going to invest in 10. So my name is Colby, the DGI Crab. Please email me your questions at dgicrab@yahoo.com and check out the links in the description below to other videos.